Hey, what's up guys? Welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I want to discuss an ETF that is really taking off, and this ETF is going to make you a lot of money because there's such a big demand that by 2025, the demand for this one item is going to grow by over 50%. So let's get right into it. So guys, the ETF that I'm referring to is called the Global X Lithium and Battery Tech ETF with the ticker symbol LIT, and it's currently trading at $52.22, and it is down 1.9% today with $1.01 off from its previous close. The current yield is 1.03% on an annual basis, which is not that bad, but it's not that good either. And the expense ratio is 0.75%, which means that for every $1,000 that you invest in this ETF, you're going to be paying $7.50, which is a little bit high compared to other Vanguard ETFs. However, this ETF has a lot of room to grow because according to this one article by CNN Business, and they quoted Bloomberg New Energy Finance, they say that by 2040, electric cars could make up 57% of all passenger car sales worldwide. And that number would most probably go even higher than that. So maybe even by 2030, even within the next 10 years, I think this number would be around 57%. So the demand for lithium batteries has grown exponentially. Here's another chart to show you that the demand for battery for lithium demand by end applications from 2013 to 2025 is going to grow. So guys, you can see here that the demand for lithium batteries is going to increase from 359 in 2020 through all the way 534 in 2025, which is approximately 50% gain from 2020, where we are right now. And you can see here that the energy storage is also increasing. The electric vehicles is going to be increasing because of the demand for electric vehicles worldwide. You have e-bikes is also increasing. And you have batteries, that traditional batteries where you use for your electronic devices, like your camera, your laptop, or other electronic devices that you use that require a rechargeable battery. And you have non-battery demand as well. And here are the sectors based on 2015 demand applications, which was non-battery demand, which was 60%. And then in 2025, you're going to have only 30% non-battery demand, and it's going to go all the way up to 38% for the electric vehicles compared to the 14% in 2015. So all that is to say that the demand for batteries is going to grow much higher than where we are right now. So guys, I wanted to show you a little bit about this ETF and show you where their weightings are in regards to where they are investing. So 36.19% is in basic materials, 23.18% is in consumer cyclical, and 29% in industrials, and 11.56% in technology. And here are their top 10 holdings as of the recording of this video. They have 10%, 10.79% in BYD, which is a strong Chinese company. They have Albemarle, which is the largest producer of lithium. They have the almighty Tesla of 7%, and Ganfeng Lithium, Contemporary Amperex Technology, LG Chem, Samsung SDI, Yunnan Energy, Nora Technology, Wuxi LED Intelligent Equipment. Looking at their 1-year chart history, this ETF has grown 109.4% over the last 1 year. And they have an RSI strength of 65 with the momentum of 2, and their money flow is at 60, which shows that they're not yet overbought. And if you look at the 1-month chart, this chart shows that this stock has currently gone up 20.52% just over this 1 month in November. And you can see the momentum is at 2 and the money flow is at 60. And if we look at the 1 week chart, you can see here that on an annual basis, this stock is still trading above the 50-day moving average of $44.69 and above the 200-day moving average of $34.13. So this gives me hope to say that this stock might come back down a little bit. It's very hard to say when an ETF is actually overbought or oversold. So what you have to do is basically dollar cost average yourself in. And whenever you see a down day like this on an ETF that is a very big industrial player like lithium is, I think it is a very good time to maybe get into it slowly and just wait for these small pullbacks. If it does touch the 50-day moving average of 44.69, that would be a very good buy-in place. Given the fact that still the money flow is at 60, I would wait until this maybe goes back down, possibly to 44, 45, if it ever does. But I think if you just dollar cost your average into this kind of ETF, you'll be fine, because over the long term, by 2025, we already see that the demand for lithium is only going to grow. And because this ETF is invested in a lot of strong lithium producers, including Tesla, which is a technology slash electronic vehicle company, you can bet that this ETF is going to light on fire, and it's going to be very, very strong. I am not a financial advisor. I'm not giving you advice what to do. I'm just telling you my opinion from based on my research and what I see on this ETF. I think this ETF still has a long way to go before it actually flattens out, or if it ever does. But given the fact that these ETFs are strongly positioned in the lithium battery market, and we see that the demand for lithium is growing, it might be a good thing to get into this type of ETF. Another thing that I wanted to show you guys was that in terms of individual holdings, yes, Tesla is a strong holding of 7% in this ETF, and Tesla alone is up 390% year to date, and it has supercharged the fund's overall performance. But according to this article, Tesla only tells part of the story. In fact, LIT holds several high-flying stocks, such as Chinese car battery maker BYD company, which is up 375% year-to-date, or Canadian miner Lithium Americas Corp, up 205%. All told, 12 of the stocks in LIT's portfolio, or 47%, have increased by at least 100% over the course of 2020. So it is not just Tesla that is driving this ETF. There are 47% of their holdings that are up more than 100% in this ETF. So they're solidly positioned. And I think that this ETF still has a lot more room to grow. And there should be in everybody's radar. And that's just my opinion, guys. Let me know what you guys think down in the comments down below. Make sure to like this video for the YouTube algorithm. And please subscribe and tap that like button for me if you like this video and if you like this content and if you got any information from it. I would greatly appreciate it. And I'll see you guys in the next video. Thanks for watching.